Check it out, guys. So it's about 11:40 a.m. right now on the East Coast, and let me tell you, the stock market is not looking good. We have the Russell down 1.3%, leading the losses. The NASDAQ is not too far behind it, down 1.2%, as the S&P is down 0.3%, and we have the Dow Jones, funny enough, up 0.2%, as the VIX is up 3%. So in this video, we're going to break down the market, starting off with the S&P 500 and the NASDAQ, and we're going to go over some charts I'm looking at, stocks I'm liking, and some data that came out this morning. So if y'all find value, of course, hit that like button. Make sure to subscribe. Don't forget to take a sip of your coffee. And on top of that, don't forget to also get up to 15 stocks from Moomoo. Link down below, guys. It is free money. More on that later. And now let's dive into it. So like I said, guys, all the indexes except for the Dow are selling off right now. And honestly, I would not be surprised if the Dow did end up going red at any moment now. Now it's up 0.15%. So it is starting to creep more towards the red. And we have the VIX now up 3.5%. So we are selling off all across the board. And when it comes to SPY, which tracks the S&P 500, let's start here. This is starting to fall under 407, which isn't the best sign for the bulls considering, and you guys probably know this if you've been watching my YouTube channel, but if you haven't been watching, you might not know, 407 was the high on SPY from the beginning of March, about a month prior to me filming this video, and we broke out of that last week, and yesterday it was looking really good, and now we're starting to fall through 407. The bulls are failing to come in to hold that level. So by the looks of it, guys, even though the bulls are still, I'd argue, in charge here in the short term, we still have a golden cross. We're above the moving averages. Now that we're falling under 407, this could start creeping down maybe a little bit more. There could be some more work on the downside here on SPY, and that could take it anywhere from 400, maybe 402, which would put it right at this trend line right here, also right by the 50 SMA. And notice how 400, 402, that was resistance in the beginning, middle of, really more towards the middle end of February, also in the beginning of March. So that would be the next level that I could see SPY going to, anywhere from 400 to 402. And if that level were to break, well, the bulls would be in trouble at that point. From 400, if that were to break, we have a wide open gap down to about 390. And time will tell, guys. We'll take it step by step. As of now, we're still well above 400 and 390. So the bulls, again, even though we're selling off a little bit right now, I'd argue the bulls are still in charge. Of course, let me know your thoughts in the comments. If you agree, disagree, I'd love to know what you guys have to think. So that's a quick look here at SPY, and if I pull up Triple Q, let's see what's going on here, which tracks the NASDAQ 100. This ended up hitting 320, 321, which you guys know that was the high from the end of August, and we called it that. It got a little bit overbought, let's be honest. We called it that, you know, we could see a pullback from that 320 level, and lo and behold, here we are, guys. We're at 314, so we did see that pullback, and essentially, guys, what we did was just pull back to the 50 SMA on the 4-hour chart. We just filled that gap back down towards 312, 314, and now's the moment of truth for the bulls. You know, if the bulls come in at around 313, 315, we might see another pop towards 320. Maybe we actually break 320 and then start running towards that high from a couple months ago, being about 330, 335. So this point right here, 310, 315, this $5 window, we have to see what happens at that point. Are bulls going to come in? Are they not? Time will tell, guys. And of course, if we fall through 310, that would not be good for the bulls at all. Let me actually set my alert there right now. Mark is at or below $310 on Triple Q. We'll see where it goes from that point. So with that being said, guys, let's dive over here and break down some key economic data that came in this morning. And you guys probably know there's a lot of data that's coming out this week, a lot of data across the board. So let's break down what ended up coming out today. What day is it today, guys? Today's Wednesday. I'm losing track of the day. So we got the ADP non-farm employment change today, which you guys can see. That came in at 145,000. The estimate was 208,000, so a lot lower than the estimate. And this measures the estimated change in the number of employed people during the previous month, excluding the farming industry and government. And this data provides an early look at employment growth. You guys can see right here, usually 2 days ahead of the government released employment data that it's designed to mimic. And why do traders care? Well, because job creation is an important leading indicator of consumer spending, which accounts for a majority of overall economic activity. You guys know. And of course, we're tracking the jobs market to see kind of what the Fed's going to do moving forward. That's a key indicator they use when determining interest rates, you know, how they're going to battle inflation, all that good stuff. And Daniel Silver, a JP Morgan economist here, said, while, quote, while we don't take too much signal from the ADP report, we think that the softness in the ADP data does provide at least some support for our view that the trend for job growth is moderating, which who knows how that, how that's going to last. We'll see some more data, of course, later this week. But again, as of now, 145,000. That's way less than the 208,000 estimated, and under the 261,000 from the previous report. And we also got the ISM Services PMI, which measures the level of a diffusion index based on surveyed purchasing managers, excluding the manufacturing industry. And you guys can see here above 50 points indicates industry expansion, below indicates contraction. You guys can see that right there. And of course, why do traders care? Well, it's a leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. And that number came in, let's see, right at 51.2. So it's above 50, indicating industry expansion, but it is lower than the forecasted number of 54.3 and the number from the previous report being 55.1. So keep that in mind. And of course, later on this week, guys, we have a lot more data coming out. We have unemployment claims tomorrow. That's a red folder here. That's a high impact event. In other words, then coming down here on Friday, we have average hourly earnings, non-farm employment change, and unemployment rate. These are going to be things that you better pay attention to, and I'm paying attention to as well. So what do you guys think? Let me know your thoughts down below in the comments, and don't forget to get up to 15 stocks for Moomoo, guys. If you haven't done that already, use that Moomoo link down below. Open up an account. You get 1 free share of stock. If you deposit at least $100, you get 4 more free shares, totaling 5 free shares of stock. And if you deposit at least $1,000, you get 10 more stocks, totaling 15 free stocks. It is free money, guys. You better get your free money. Link down below. And full disclosure, it also helps out the channel. I appreciate you guys as always. And now let's quickly take a look at some stocks and see how overall these markets are moving right now. So again, we're pretty much all in the red now. The Dow's holding on by a thread in the green, and we do have a couple stocks that are doing fairly well right now. AMC's back over $4 a share, which we covered yesterday. Go check out my AMC video from yesterday. We're not going to dive too deep into that right now, but it is up about 3%. It is starting to spike back over $4 a share. We have, let's see, SQQQ creeping up a little bit here, as we are seeing, again, the overall market sell off, and there could be some more upside on this thing if QQQ does start falling under this key level that we outlined earlier in the video, being about 310, 315. So keep your eyes on SQQQ. We have Visa up a little bit, barely, but it looks like here that inverse head and shoulders is playing out. And with today's move, we're starting to break out of the highs from about a month ago, early March. So that's a good sign. We might run up towards 230, 235. That is the next level that I see here on Visa. Let's see what else is moving, guys, before we wrap up this video. Oh, wow, Tesla's down 4%, which I might make a video on Tesla later on today. This is at a critical level. So yeah, we'll wrap it up there. I'll make another video on Tesla talking a little bit about what's going on there. We'll break down the chart. So yeah, if you guys enjoyed the video, hit the like button. Make sure to subscribe to this channel and my second channel, Stas Talks Money. We're doing a $100 giveaway once we hit 1,000 subscribers on Stas Talks Money. Link down below. And don't forget to also get up to 15 stocks from Moomoo, up to 12 stocks from Webull. And if you guys want to be a part of the Patreon, check it out. All the details are down below. And with that being said, I'll catch you guys later.